are the group who will tackle about inventory. Before we will discuss about our topic, let me and them introduce ourselves first. I am Ken Joel.
I'm Maria Lucille Ovilio.
I'm Dong Elisa Gabonada.
And we are the team.
People.
And we are the Team People.
So, viewers, do you have any idea of inventory? So, inventories are assets that are held for sale in ordinary goods, like finished goods. Other than that, inventories are also in the process of production and sale, like work in process. And lastly, it is in the form of materials and supplies to be consumed in the production process while rendering and services, like raw materials and manufacturing supplies.
Examples of inventory is the merchandise purchased by a trading entity and held for resale, land and other property held for sale in an ordinary course of business.
Other examples of inventories are finished goods, goods undergoing production, raw materials, and supplies awaiting use in the production process by a manufacturing entity. Moreover, ordinary course of business refers to the necessary, normal, or usual business activities of an entity.
In order for you to learn more about inventories, we will give you some problems on how to measure inventories, apply the cost formula, inventory system, and lastly, to account for inventory write-down and reversal thereof. So here are some problems. Problem number 1. Dawn Corporation purchased goods with invoice price of 3,000 pesos on account on December 27, 20x1. The related shipping cost amounted to 50 pesos. The seller shipped the goods on December 31, 20x1. Dawn Corporation received the goods on January 2, 20x2 and settled the accounts on January 5, 20x2. How much is the net cash payment to the supplier if the terms of the shipment is FOB destination freight collect? So, first we must understand the problem. There was an invoice price of 3,000 pesos, which is the purchase cost of those goods that was purchased by Dawn Corporation, and there was a related shipping cost which is 50 pesos. In order to get the net cash payment of the supplier, we must know what is the term that was used in that agreement of that shipment, which is FOB destination freight collect. If FOB destination freight collect was used on that term, the buyer or the purchaser will not recognize the freight in, only the supplier, which is 50 pesos is the shipping cost. That is the freight in or freight collect of that situation. So to get the net cash payment of the supplier, we must just deduct 50 pesos from 3,000 pesos to get the net cash payment to the supplier. So 3,000 minus 50 pesos is equals to 2,950 pesos. That is the cash payment to the supplier. So that is the answer for problem number 1. This is the situation for problem number 2 and 3. On December 31, 20x1, ABC Corporation has a balance of 240,000 pesos in its inventory account, determined through physical count, and a balance of 90,000 pesos in its accounts payable account. The balances were determined before any necessary adjustment for the following. A. Segregated goods in the shipping area marked, bill, and wholesale were included in the inventory because shipment was not made until January 4, 20x2. The goods were sold to the customer on a bill and wholesale for 20,000 pesos on December 30, 20x1. The customer accepted the bill on that day. The cost of the goods is 10,000 pesos. The goods were already packed and ready for shipment. Both ABC and the buyer acknowledge the shipping term. B. A package containing product costing 80,000 pesos was standing in the shipping area when the physical inventory was conducted. This was included in the inventory although it was marked hold for shipping instructions. The sale order was dated December 17, 20x1, but the package was shipped and the customer was billed on January 4, 20x2. C. Merchandise costing 10,000 pesos shipped FOB destination from a vendor on December 30, 20x1 was received and recorded on January 5, 20x2. D. Goods shipped FOB shipping point on December 27, 20x1 from a vendor to a ABC Corporation were received on January 6, 20x2. The invoice cost of 30,000 pesos was recorded on December 31, 20x1 and included in account as goods in transit. So problem number 2 question, how much is the adjusted balance of inventory? So let us, for problem number 2, they asked what is the adjusted balance for the inventory. So don't mind these first, just focus with this first. So we must put the adjusted balance, which is 240. I already said that in the beginning of that situation that was given to us. 240,000 for the inventory. That was the adjusted balance. But then there were some adjustments for the inventory for December 31, 20x1 for the ABC Corporation. A, it was the bill and hold sale. We have an entry with that, which is 10,000 pesos. But where did we get 10,000 pesos? First, remember that it was included in the inventory, right? The bill and hold sale was included in the inventory for December 31, 20x1. But the shipment was not made until January 4, 20x2. But there were goods that was sold to the customer which cost 20,000 pesos. 20,000 pesos. But where do we get the 10,000 pesos? 20,000 pesos on December 31, 20x1. The customer accepted the bill on that day. They accepted the bill on that day. But the cost of those goods was only 10,000 pesos. Half of the 20,000 pesos that was sold to the customer. So the goods were already packed and ready for the shipment, and both ABC and the purchaser or the buyer acknowledged the shipping term, and it was already billed on that day. They accepted the bill there, so it was being included. There would be a deduction for the inventory, which is 240,000. Next, B, the unshipped goods counted. We don't have any entry with that because the package was shipped and the customer was billed on January 4, 20x2, which is 4 days after the inventory, which is December 31, 20x1. Then C, FOB destination excluded. It was received and recorded on January 5, 20x2. So it will not be included in the December 31 inventory. So D, good FOB shipping point properly included. It will always not be, the 30,000 pesos will not be recorded on was recorded on December 31, 20x1, but it was not recorded in the inventory. It was included in the goods in transit, so we don't have any entry with that. So to get the adjusted balance, we must do 240,000 pesos deducted by the 10,000 pesos from the bill and hold sale would be 230,000 pesos. It would be the adjusted balance for December 31, 20x1 for the ABC Corporation. That would be the adjusted balance for inventory only, inventory. Okay, for the problem number 3, where we're asked how much is the adjusted balance for accounts payable. So we must focus in the last part. So first, same on what we do in the inventory. Adjusted balance for account payable would be 90,000. It was stated in the problem, right? And balance of 90,000 pesos in each payable account. Okay, but then there was necessary adjustment for accounts payable. E, for the bill and wholesale, we don't have any entry with that because the entry would just only involve for inventory. So we don't have any entry. For the B and ship goods counted, we don't have any entry because the problem here, the situation here doesn't involve account payable. C, FOB destination excluded. We don't have any entry with that also because the situation or the problem for C does not involve accounts payable. Lastly, for FOB shipping point properly included, we don't also have entry for that because it only involved for the goods in transit because the 30,000 pesos was included for the goods in transit. So for the adjusted balances, a balance for accounts payable would be the same with the unadjusted balance because we don't have any entry for A, B, C, and D. So 90,000 would also be the adjusted balance. So 90,000. So the adjusted balance for accounts payable would be the same. So 90,000 pesos. So that's the answer for problem number 3. So let's move on to problem number 4. The records of ABC Corporation show the following. A. Goods sold on installment basis to XYZ Incorporated. Title to the goods was retained by ABC Corporation until full payment is made. XYZ Incorporated took possession of the goods, which is 150,000 pesos. B. Goods sold to Alpha Corporation for which ABC Corporation has the option to repurchase the goods sold a set price that covers all costs related to the inventory, which is 250,000 pesos. C. Goods sold under a sale on trial arrangement is 70,000 pesos. Lastly, D. Goods received from Beta Corporation for which an agreement was assigned requiring ABC Corporation to replace such goods in the near future is 50,000 pesos. The question is, how much is needed as part of the inventory? So, included in the inventory, so we must analyze each situation that was each record of the ABC Corporation so that we can fully understand what is included in the inventory. A, let's start from A. Goods sold on installment basis to XYZ Incorporated. Title that the goods was retained by ABC Corporation until full payment. But remember, XYZ Incorporated took possession of the goods. So the 150,000 pesos was not with the ABC Corporation. So it would not be part of the inventory. B. Goods sold to Alpha Corporation for which ABC Corporation has the option to repurchase the goods. Set a price that covers all costs related to the inventory is 250,000. But still, it will not be part of the inventory because it would be part of Alpha Corporation, not to the ABC Corporation. So, B, or the 250,000 pesos, is not included in the inventory of the ABC Corporation. C. Goods sold under a sale on trial arrangement, which is 70,000 pesos. It would be part of the inventory of the ABC Corporation. Why? Because the goods sold under a sale on trial arrangement is in the ABC Corporation. It doesn't involve in any corporation which I stated above with A and B. So C, which the goods sold under the sale on trial arrangement, would be part of the inventory of ABC Corporation. D. Goods received from Beta Corporation for which an agreement was signed acquiring ABC Corporation to replace such goods in the near future, which is 50,000 pesos. It would also be part of the inventory because the ABC Corporation can replace such goods in the near future. So it would be part of the inventory. So 70,000 pesos plus 50,000 pesos would be 120,000 pesos. 120,000 pesos would be part of the inventory. So, the included inventory for the ABC Corporation would be 120,000 pesos.
Which uses a periodic inventory system. In the current year, ABC Corporation's ending inventory is understated of 20,000 pesos. Which means that the cost of goods sold is overstated by 20,000 pesos, while the net income or the gross income of the ABC Corporation would also be understated by 20 pesos. Whenever that happens, when the ending inventory is understated, the net income would also be understated. While if if ending inventory is understated, it would be an opposite to the cost of goods sold. It would be overstated. So that is the effect when the ending inventory is understated.
Sixth question. January 1, 20X1, Plaka Corporation acquired goods for sale in the ordinary course of business for 250,000 pesos, excluding 5,000 pesos refundable purchase taxes. The supplier usually sells goods on 30 days interest-free credit. However, as a special promotion, the purchase agreement for these goods provided for payment to be made in full in December 31, 20X1. Transport charges of 2,000 pesos were paid on January 1, 20X1. An appropriate discount rate is 10% per year. How much is the initial cost of the inventories? The problem is about deferred payment, wherein the deferred settlement terms, when payment for purchase is deferred and the arrangement effectively contains a financing element, the difference between the purchase price for normal credit terms and the amount paid is recognized as interest expense over the period of the financing. So to get the initial cost of inventory, so first is to identify its purchase price, followed by the present value, then the cash price equivalent of the inventory purchased, then add its transport charges to get the initial cost of inventory. So it has a refundable purchase taxes of 5,000, but it states it is already excluded, meaning hindi na siya paid. So our purchase price excluding refundable purchase taxes is 250,000. Our purchase price excluding refundable purchase taxes is 250,000. So next is to get the present value of 1 peso. So the formula is 1 plus I to the power of negative n. So simply 0.10, because it states in the problem that the discount rate is 10% per year. Per year meaning it's only 1 year lang. So that's it. So the answer of this is 0.90909. Oh, multiply it by the PV of 1, which is the 0.90909. Then its cash price equivalent of inventory purchase is 257.73. So next is to add its transport charges, which is 2,000 pesos, to get the initial cost of inventory. So our initial cost of inventories now is 259,223 pesos. So the answer is letter A. Seventh question. Shano Corporation acquired a tract of land for 2 million pesos. The land was developed and subdivided into residential lots at an additional cost of 200,000 pesos. Although the subdivided lots are relatively equal in sizes, they were offered at different sales prices due to differences in terrain. Information on the subdivided lots is shown below. From Group A, it has number of lots of 4. Its price per lot is 480,000. From Group B, its number of lot is 10. Its price per lot is 240,000. And from Group C, its number of lots is 15. And its price per lot is 192,000. During the year, 2 lots from the A group, 3 lots from the B group, and 12 lots from the C group were sold. How much gross income is recognized during the year? So the problem is a purchase in lump sum, but the given problem is to find the gross income. So to find the gross income, we need to subtract the sales revenue by the cost of sale to get the gross income. But before that, we need to first solve the allocated cost. So the given problem is already given. So that's it, guys. So it has group A, B, and C. Its number of lots is 4, 10, and 15, and it has different price per lot. So to get the total price, we need to multiply the price per lot and the number of lots. So 4 times 480,000 is equivalent to 1,150,000. Next, 240,000 times 10 is equivalent to 2,100,000. And lastly, 192,000 times 15 is equivalent to 2,850,000. So its overall total price is 7,200,000. So its overall price is 7,200,000. So to get the allocated cost, we need to multiply the cost of land by the total price divided by the overall total price. So the question is, how much is our cost of land? As states in the problem, it has a tract of land of 2 million pesos. And it has an additional cost of 200,000 pesos. So we need to add that both, because that both is the cost of tract of land. So that is our cost of land, which is 2,200,000. So each group will be multiplying it by their specific price and divided it by the overall total price. So our allocated cost now is 2,200,000. So next step is to get the sales revenue. So at this time, number of lots sold na po na nga itong i-multiply sa price per lot. So to get the sales revenue, we have to multiply this one. So our sales revenue now is 3,984,000. So next is to get the cost of sale. So we have already a sales revenue. Wala na lang sa tuwa is cost of sale to get the gross income. So next is to get the cost of sale. To get the cost of sale, we need to multiply the allocated cost by the number of lots sold and divided it by the number of lots. So our allocated cost, allocated cost, which is our first solution, this one, which is the 2,200,000. So in each allocated cost, or in each group in its allocated cost, this will be multiplied by their specific number of lots sold and divided by its number of lots to get its cost of sale. So now our cost of sale is 1,217,334. And now, Since may sales revenue at cost of sale na tayo, we can now get the gross income. Simply to subtract this both. So, our gross income is 2,766,666. So, the answer for number 7 is letter A. Next problem. Chris Lens Corporation is a wholesaler of guitar picks. The activity for product Pick X during August is shown below. From August 1, it has a transaction of inventory. Its units is 2,000. Its unit cost is 28.80 pesos. And its total cost is 57,600. From August 7, it has a transaction of purchase. Its units is 3,000. Its unit cost is 29.76 pesos. And its total cost is 89,280 pesos. From August 12, its transaction is sales. Its unit is 4,200. From August 13, its transaction is purchase. Its units is 4,800. Its unit cost is 30.40 pesos. And its total cost is 145,920 pesos. From August 14, it has a transaction of sales return. Its units is 600. From August 22, it has a transaction of sales. Its units is 3,800. From August 29, it has a transaction of purchase. Its units is 1,900. Its unit cost is 30.88 pesos. And its total cost is 58,672 pesos. Lastly, from August 30, it has a transaction of purchase return. It has a units of 300. It has a unit cost of 30.88 pesos. And it has a total cost of negative 9,264 pesos. With its total goods available for sale of 342,000 pesos. So 8th question. How much are the ending inventory and cost of goods sold under the FIFO periodic cost flow formula? Letter A. Ending inventory is 219,840. Its cost of goods sold is 122,368. Letter B. Its ending inventory is 112,341. Its cost of goods sold is 229,867. C. Its ending inventory is 122,368. Its cost of goods sold is 219,840. Or letter D, its ending inventory is 122,386. And its cost of goods sold is 219,804. So, FIFO periodic. So, first is to get its total goods available for sale in units and its ending inventory in units. So, our beginning inventory in units is 2,000. Next is to get the net purchases in units. So, how to get the net purchases? So, as you saw on the table, it has a different purchases. So, we have to add all purchases deducted by the purchase return. So, our net purchase, we have 3,000. From August 7, we have 4,800 in August 13, and we have a purchase in August 29, and we have a purchase return from August 30. So 3,000 plus 4,800 plus 1,900 minus 300 is equals to 9,400. So, our total goods available for sale in units is 11,400. Next is to get the ending inventory in units. So, first is to deduct the total goods available for sale in units by its quantity of goods sold. So, to get the ending inventory in units, we need to deduct the total goods available for sale in units by the quantity of goods sold. Okay, so what is the quantity of goods sold? All sales and sales return. Parehara siya sa net purchases in units. So, we have to deduct the sales return. So, we have a transaction from August 12 of 4,200. August 14, we have sales return of 600. And from August 22, we have a sales of 3,800. So, add and deduct 4,200 minus 600 plus 3,800 is equivalent to 7,100. So our ending inventory in units is 4,000. So next step is to create a table to allocate the different purchases to get the ending inventory at cost. Ito is in units. Next is to get the ending inventory at cost. So here is the ending inventory at cost. Kanina is yung ending inventory at unit. Now ending inventory at cost. This is how we get the ending inventory cost. So first is the ending inventory to be allocated. So we have the 4,000. So from August 29, we have a net purchase of 1,600. Again, to get the net purchases, deduct the purchase and the purchase returns to get the net purchase. So our units is 1,600. Multiply it by the 30.88, its unit cost. So our cost is 49,408 pesos. Now, so our balance to be allocated to the next most recent purchase date, we need to deduct this one to get its recent purchase date. So the answer is 2,400. Next is it's before the date of the last purchase. So which is from August 13. So 2,400, we deduct it by the 2,400 since the purchase is 4,800 yung nasa table. We deduct it by the 2,400. Then its unit cost is 30.4k, so we need to multiply that one. It is 17,960. So we add this one. Our ending inventory at cost now is 122,368 pesos. So we already have an ending inventory at cost, which is 122,368. So our next is to get now the cost of goods sold. So we already have a total goods available for sale in pesos in our previous table, which is 342,208. So our ending inventory cost is 152,368. We have to deduct this one to get the cost of goods sold. Now, our cost of goods sold is 219,840. Again, our ending inventory cost is 122,368. Our cost of goods sold is 219,840. So the answer for number 8 is letter C. Number 9. How much are the ending inventory and cost of goods sold under the FIFO perpetual cost flow formula? A. Its ending inventory is 219,840. Its cost of goods sold is 122,368. B. Its ending inventory is 112,341. Its cost of goods sold is 229,867. Letter C. Its ending inventory is 122,368. Its cost of goods sold is 219,840. Letter D. Its ending inventory is 122,386. And its cost of goods sold is 219,840. In the previous question, yung hinanap is FIFO periodic cost. At this time, FIFO perpetual cost flow formula. I might say that the answer for number 8 and 9 is the same but different process. Pero yung sa table lang yung iba. So notice that FIFO periodic and FIFO perpetual yield the same amounts of cost of goods sold and ending inventory. So because of that, when you take CPA board exams, I suggest that you might use a FIFO periodic, even though that the problem states that you will use FIFO perpetual, because mas sayon ang FIFO periodic than FIFO perpetual. In FIFO periodic, maliit lang yung solution, but in FIFO perpetual, it has plenty of accounts to use in the table. This is because former solution is a lot simpler to apply. So the answer for number 9 is still letter C. Number 10. How much are the ending inventory and cost of goods sold under the weighted average periodic cost flow formula? A. Its ending inventory is 229,840. Its cost of goods sold is 112,160. Letter B. Its ending inventory is 126,468. Its cost of goods sold is 215,740. Letter C. Its ending inventory is 120,080. Its cost of goods sold is 222,128. Or letter D. Its ending inventory is 120,072. Its cost of goods sold is 222,153. So 8 and 9, yung hinanap is FIFO periodic and perpetual. At this time, it is weighted average periodic cost flow. Periodic. So, the question is to get the ending inventory cost and its cost of goods sold. So here, ending inventory in units 4,000, we need to multiply this one with the weighted average cost of 30.02. Now our ending inventory at cost is 120,080. Next is the cost of goods sold. So our total goods available for sale in pesos is 342,208. We deduct it by the ending inventory at cost of 120,000. So our cost of goods sold now is 222,128. Since we already have an ending inventory at cost and we already have a cost of goods sold of 222,128, so the answer for number 10 is letters. Number 11. How much are the ending inventory and cost of goods sold under the weighted average perpetual cost flow formula? A. Its ending inventory is 121,794. Its cost of goods sold is 220,414. B. Its ending inventory is 122,468. Its cost of goods sold is 219,740. C. Its ending inventory is 122,017. Its cost of goods sold is 220,191. Letter D. Its ending inventory is 123,384. Its cost of goods sold is 218,824. So here, yung hinanap is weighted average perpetual. Kanina is periodic. This time, perpetual. We need to get the ending inventory and cost of goods sold. So how do we get the ending inventory and the cost of goods sold on the weighted average perpetual cost flow formula? We need to get the total cost of the inventory, the purchase returns, sales, and the sales returns. In cost of goods sold, we just get the total cost of the sales and sales returns. So first step is we need to get the ending inventory using this table. first date from August 1, it has a transaction of inventory, it has a unit of 2,000, it has a unit cost of 28.80 pesos, and its cost is 57,600. So from August 7, it has a purchase and its units is 3,000, its unit cost is 29.76 and its total cost is 89,280. So the total of 5,000 in units, 29.38 in unit cost, and 146,880 in total cost. So next is the sales. From August 12, it has a transaction of sales. Deduct because it is a sale. Deduct here. Deduct also by the total cost. Next is from August 13. It has a transaction of purchase of 4,800. It has a unit cost of 30.40 and its total cost is 145,920. So from here, deduct by the 4,200 and 4,800, this is 5,600. Also here, 30.25. Then here, same output, same solving. The answer is 169,404. Next, from August 14, it has a transaction of sales return, which is 600. Its unit cost is 29.38, and it has a total cost of 70,628. So a total of 6,200, 30.17, and 187,032. From August 22, it has a sales of 3,800 in units. Its unit doesn't have a unit cost since it is a sale, and its total cost is 140,646. That will be deducted by the purchase. Next is by August 29, it has a purchase and it has a units of 1,900. Its unit cost is 30.88. It has a total cost of 58,672. Then, lastly, on August 30, it has a transaction of purchase return. Its units is 300. Its unit cost is 30.80. And its total cost is 10,264, which to be deducted. So we have to add this one and deduct all. So our ending inventory now is 121,794. So we already have an ending inventory. Next is to get the cost of goods sold. So here. So on August 12, we have a transaction of sales. Its units is 4,200. It has a total cost of 123,396. By August 14, it has a sales return of negative 600 units. Its unit cost is 29.38 and its total cost is 17,628, which to be deducted in getting the overall total cost. Next, by August 22, it has a transaction of sales. Its units is 3,800 and it has a total cost of 114,646. So to get the cost of gold, simply add, deduct, and add. So our cost of goods sold is 220,414. Since we already have an ending inventory of 121,794 and a cost of goods sold of 220,414, the answer for number 11 is letter A.
Number 12. Vacation Co. buys and sells products A and B. The following unit costs available for the inventory as of December 31, 20x1. Reminder, all costs are borne by Vacation Co. So this is the following information. Number of units. A is 2,000 and B is 3,000. Purchase cost per unit. 125 pesos from A and 190 pesos from B. Delivery costs from supplier. 10 from A and 30 from B. Estimated selling price. 150 from A and 250 from B. Selling cost. A 22 and B 28. General and administrative. 15 from A, and 18 from B. So the question is, how much total inventory shall be reported in vacation cost 20x1 financial statements? The problem 12, we are going to find a cost per unit and NRV per unit. So to solve it, we are going to have a cost. The purchase cost per unit and the delivered cost from suppliers or freight in is belong to cost. I think this two is already given to the information. So purchase cost per unit from A is 125 and B is 190. The delivered cost from suppliers or freight in is 10 from A and 30 from B. So the total of it, we're just going to add the two. So 125 plus 10 was 135. Then 190 plus 30 is 220. So it will result in cost per unit. So nanatay cost per unit. So NRV per unit nasagta. So to find the NRV per unit or to solve it, we are going to have a net realizable value. So the net realizable value is the estimated selling price and the selling cost. So the estimated selling price, I think this two also is already given. So the estimated selling price is 150 from A and 250 from B. The selling cost is 22 from A and 28 from B. So to solve the NRV per unit, we're just going to deduct selling cost. So 150 minus or deduct by 22 costs 128. So the from A, from B, 250 deducted by 28 or minus 28 was 222. So this is the last step. So the last step to find the inventory of December 31, 20x1 is we are going to solve the lower of cost and NRV. So the lower of cost and NRV from A is 128. Why 128? It's because from A, the cost per unit is 135. The NRV per unit is 128. Reminder, lower. Pangitaon ang lower. So, naikuha na to ang 128. And the B is 220. Okay? Dako pa man ang NRV per unit sa B kaysa sa cost per unit. So, next is number of units. I think number of units is already given. So the number of units is from A is 2,000 and B is 3,000. So you're just going to multiply the 128 and the 2,000 from A, and that will result 256,000. Inventory of December 20x1. This is the last step. And B is 220 multiplied by 3,000 is 660,000 from B. So, the total of the inventory of December 31, 20x1 is 916,000. You're just going to add the 256 plus 660,000. Number 13. On January 1, 20x1, Shako signed a 3 years non-cancelable purchase contract that allows Shako to purchase up to 12,000 units of a microchip annually from Ahako at 15 pesos per unit. The guaranteed minimum annual purchase is 3,000 units. At year-end, it was found out that the goods are obsolete. Obsolete means is no longer used. Shako had 4,000 units of this inventory at December 31, 20x1 and believes these parts can be sold as scrap for 5 pesos per unit. So the question is, how much is the loss on purchase commitment to be recognized on December 31,
20x1. To solve number 13, this is the solutions. So to know how to solve it, first, we have a guaranteed minimum annual purchase. The guaranteed minimum annual purchase is already given to the information and it has 3,000. Then, we are going to multiply the guaranteed minimum annual purchase by the remaining years in the contract. The remaining years in the contract is 2 years. Why? Because Shako is signed 3 years contract. So, dahil nabilin nga 2 years, kay ang gipangayot dito is 20x1 naman. So, naay 20x2 o 20x3. So, naay nabilin nga 2 years. Then, it will sold to the total goods to be accepted in the future and it has 6,000. Then, total goods to be accepted in the future, we are going to multiply it by the purchase price per unit. The purchase price per unit is, first is have a 15 pesos. Why nga nung 10 na siya, di ba? 15 pesos minus 5. Asa na ko siya nakuha? 15 pesos is the shock ko pagpalit niya og 12,000 units na microchip annually kang aha ko nga cost siya nga 15 pesos. Dayon na may nabutang ito nga ang mga products kay obsolete, so no longer. But Shako believes nga ang microchip daw kay mabaligya siya nga 5 pesos per units. So, mao na 5 pesos per units nga matawag na to nga salvage value. So, 15 minus 5 equals 10. So, the loss on purchase commitment is 60,000. Ano 60,000? 6,000 times 10 equals 60,000. The raw materials inventory of Magco on December 31, 20x1 have a cost 20,000 pesos and an estimated net realizable value of 18,000 pesos. Information as follow of finished goods. The cost is 250,000 and the NRV is 280,000. So the question is, how much is the total inventory on December 31, 20x1? Solve number 14 problem. First, we have a 20,000 the raw materials and 250,000 the finished goods cost. So, i-add lang niya siya ang 20,000 ug ang 250,000 mo na siyang result 270,000. I-disregard na to nimo ang 18,000 nga estimated net realizable value ug ang net realizable value sa finished goods na 280,000. So, inani ang pag-solve para makuha ang total inventory on December 31, 20x1. Almosco had the following comparative information regarding its inventories. Inventory December 31 at cost 30,000 in 20x2, 24,000 in 20x1. Inventory December 31 at NRV or net realizable value is 33,000 in 20x2 and 22,000 in 20x1. The cost of goods sold before adjustment is 180,000 in 20x2 and 200,000 in 20x1. Reminder, Almosco recognize write down inventories in cost of goods sold. So, number 15 question, how much the cost of goods sold in 20x? Number 15, this is the solution. First, inventory December 31 at cost and inventory December 31 at NRV. I think kaning duha kay given na siya sa information nga gihatag. Kaning 20x2 i-disregard sa na kay 20x1 man ang ipangita. So, ang December 31 at cost kay 24,000, then ang inventory sa December 31 at NRV is 22,000. To come up the 2,000, i-deduct na to ang inventory December 31 at NRV sa inventory December 31 at cost. So, mauna na siya ang write down or write up of inventory, ang 2,000. Next step, to find the answer of 20x1 cost of goods sold, ato sa nikwaon ang cost of goods sold before adjustment. So, kani siya kay given naman siya, gihatag naman siya sa information. So, ato na lang isulat sa 20x1 kay 200,000. Dayon, atong i-add ang write down or write up of inventory nga 2,000. Dayon, mauna na siya ang 202,000 nga adjusted cost of goods sold sa 20x1. So, mauna na siya ang answer sa cost of goods sold sa 20x1. In problem 16, connected ra siya sa 15 nga information. So, ang question sa 16 is, how much is the cost of goods sold in 20x2? So, to solve number 16, this is the solution. The inventory of December 31 at cost, inventory of December 31 at NRV. This information kay naa siya sa 15 nga information. Connected ra sila sa 16. Ang at cost sa 20x2 is 30,000 o ang NRV sa 20x2 is 33,000. And the write down or write up of inventory is negative 3,000. Parang negative 3,000 man. Kay less man nimo ang NRV sa cost. Dako man ang NRV kay 33,000 sa 30. So, pantog less ang answer sa write down or write up of inventory. Nga, bantog 3,000 siya. So, next step, we have a cost of goods sold before adjustment. Ang cost of goods sold before adjustment is given na gyapon siya. And 180,000 siya sa 20x2. So, next step, deduct na to ang 180,000 sa write down or write up of inventory nga 2,000. Ganun 2,000 man. 20x1 ta magkuha, dili sa 20x2. Bantog less siya. Kay less man ang write down of inventory sa 20x2. So, na less siya dire. Ang amount magkuha ta sa 20x1, then ang add ba siya or less ba siya sa 20x2. So, mauna na siyang adjusted cost of goods sold nga 178,000 sa 20x2.
So that's it, guys. I hope you learned something about solving problems involving inventory.
So guys, this may help you in solving some accounting problems, especially when you take CPA board exam soon.
So again guys, thank you for watching and don't forget to like, share, and subscribe my channel, Realization. So
Laban mo
goodbye.
sa future step.
Thank you for watching.